Ifeoma, thank you so much for your time. Let's quickly review the markets and how they traded today on the back of that MPC decision. As widely expected, no rate change, but at some point we have to see these yields begin to rise again. But can you just review the markets for us today?
Okay, thank you very much for having me. I'll start from the beginning of this week. So for Monday, the fixed income market has been dominated by bearish reactions, both in the treasury bills and bond space. We observed major demand for short duration bonds as investors reinvested their coupon payments received this month. About 50 billion of the 2022 bond was also received today, culminating in another round of bond price increases. And at the belly of the curve, we noticed that the 2049 bond lost the most ground in price, hitting 10% levels, which has not been seen since August 2020. We also noticed traders reacting as bears on the treasury bill spectrum. System liquidity crunch begins the week, resulting from about 520 billion of CBN CRR debits carried out at the close of last week, kicked off the bearish reaction seen in the market. However, we also noticed sell-offs by offshore players, as well as weak appetite for T-bills compounding this reaction. Yesterday, like you rightly said, was the conclusion of the MPC two-day policy meeting, and the central bank resolved to hold all the monetary policy rates constant, and also the MPC rate constant at 11%, and also hold all the other policy parameters constant. We expected that to happen because from the administration of this central bank governor, all the maiden editions of the inaugural monetary policy meeting have seen them hold all their policy rates constant as they continue to maintain a wait-and-see approach. Today's trading day has fairly been quiet. We had the NC bills primary market auction where 107.3 billion is being rolled over. And as the week progresses, we expect the treasury bills maturities totaling about 377.45 billion to ease the current gap seen in system liquidity and also drive retail orders. We also expect to see more sell-offs as traders seek to take profits on their positions as generally just stay closed.
All right, so you mentioned that you're expecting more sell-offs moving forward, but how high do you think yields are likely to go in the short to medium term, in your view?
Well, the maturities we expect, they are not as much as happened last year. For now, we're seeing about 300 to 400 billion of maturities compared to close to $1 trillion that was coming in at the last quarter of last year. So we don't expect rates to rise so much. We expect trickles of demand to come into the market. But as for rates rising as much as happened last year, we don't expect to see a lot of rate increases.
What's your take on foreign investor appetite? You mentioned that there was a sell-off by some foreign investors today, but do you get the sense that that is likely to be the trend in the short to medium term?
Yes. So the foreign investors selling off their positions is because they are still on the queue. They are still on the FX queue. So they cannot get out their foreign exchange for now. So what they do is just to reinvest the maturities as they come in and to roll over and then to take profit on their positions. But as soon as they are able to get their FX on the queue, then they would exit as they've been doing, just little by little.
But is there any indication that that is likely to improve, or that's $1 million question for now? I'm talking about the forex sales by the central bank to, or anyone really. Forex does appear to be scarce right now, especially for foreign portfolio investors.
Oh yes, the central bank is trying their best to meet all obligations, and they have rightly said that they will do everything to ensure that all foreign investors get their money as they want, just like they recently barred exporters from accessing banking services if they don't remit their foreign export proceeds. So we surely know that they would meet all obligations as is available.